Welcome to the AACFB's 2026 Meet the Funder/Associate webinar series. My name is Monica Harper. I'm the Executive Director for the AACFB, and I will be your host. Our presenters today are Shivi Sharma and Utsav Shah from Kaaj. Kaaj is both an associate member, and a gold sponsor of the AACFB, and I'd like to thank them for their support of the association. Before I turn it over to Kaaj, I'd like to go over a few items to make this webinar more enjoyable and informative for everyone. During the presentation, you see a Q&A box that allows you to ask questions. If you have any questions, please submit them in the box and they will be answered by the end of the webinar. The entire webinar will take no more than 30 to 45 minutes. And for those of you who would like to review this at a later date, it will be posted on the 2026 Meet the Funder page of the website, and it will be emailed out to the AACFB membership. At this time, I will turn it over to Shivi and Utsav. It is all yours.
Thank you, Monica, for our introduction. Super excited to be here. I'll quickly introduce myself. Hi, everyone. I'm Shivi, one of the co-founders of Kaaj. My background is in credit and fraud risk and fintech and banking. And we've been building Kaaj with all of you awesome people for the past couple of years. Super excited to build this product for the industry and bring it here for you. I'll let Utsav give a quick introduction and we'll answer all your questions towards the end.
Hey everyone, super excited to do this. I'm Utsav, I'm the founder and CEO of Kaaj. My background has been in AI and machine learning for about a decade. I spent about 5 years at a small company named Uber. It was a very small company when I joined, pre-IPO to post-IPO. And just prior to this, I was building self-driving cars here in San Francisco, part of their AI team. Now building Kaaj with Shivi for about a couple of years. We are very focused on the equipment finance industry, as a lot of you may know, and very focused on solving the origination and underwriting problems that we all have and we all face day in and day out. With that being said, I would probably want to jump in quickly on what Kaaj really is. How do we define workflows in Kaaj? What exactly does it do? How does the software really work with a lot of the brokers and the lenders on our platform already? So give me a quick minute so that I can quickly share my screen. All right. Just give me a thumbs up if everyone can see my screen, or also please feel free to drop in your questions at any time so we can answer them later. So here is a typical Kaaj workflow. As you all know, you would be getting a credit application and a bunch of documents from somewhere. So either you're partnering with a vendor, a dealer, or directly hosting a online application on your websites. Kaaj really takes in the application and all of these documents from any of these sources. So you could forward an email, you could link up and attach your portals through our APIs, or you can also host our own online application onto your website, which would be a white labeled online application that you can host on your website. So collecting documents, collecting data from borrowers becomes super simple through these online applications or portals, or just forward an email. Now, the moment an email gets forwarded, we organize all of the documents, parse out all of the documents within that, be it applications, invoices, etc., and then run a bunch of underwriting steps so that we can figure out what the business does, what's the credit quality of the borrowers, what's the credit quality of the business, how do their financials look like, and which lender or which funder will this deal go to. So let's imagine that you get a new application. So here is the Kaaj dashboard. If I click into any of this application, let's say this one, and go to files. Now, assume that you get a new file or a new document package, which is a zip folder and has a bunch of different documents related to it. Borrowers, for a lot of times, and even dealers, they would just send you a document without any naming convention. So it could be one.pdf or scan.pdf or bank.pdf, etc. The first thing that we do is we figure out what are the different kinds of documents which are available or present in this package. So here we can see there is a loan application, there are 5 bank statements, there are 3 invoices, there are a bunch of financials, tax returns, etc. Now, based on what we find here and what we find on the document, we will rename according to a standardized naming convention. So all of this data or all of these documents get auto renamed according to a standardized naming convention saying, hey, every credit application will look like credit application, name of the business, date of the application. Similarly, for bank statements, the account name, the period of the bank statement, etc. So nobody has to manually sort out all of these documents. Now, this also helps if you get a really huge PDF file or multiple documents stitched together. So if it's a 100-page PDF or a 200-page PDF file, we'll also split those documents and say, okay, page 1 to 5 is a credit application, 5 to 7 is the invoice, 7 to 20 is the bank statement. Now, the moment we understand what are the documents and what are all of the document types, we figure out, okay, here's the application. We then go ahead and parse out the entire application. So this is where we run our OCR models, and our AI goes into each of these documents and figures out what are the best data points that we can extract. So from here, we can extract, okay, here's the name, the phone numbers, the DOBs, the addresses, etc. And then we do a lot of things on top of this as well. So as you can see, we'll always grab a formatted address, which would be a USPS style address so that you don't have to worry about standardizing or formatting addresses. We'll also give you the details of the county of those addresses and figure out if it's a PO box or a business address or a residential location. Similarly, we'll extract out all the information from the businesses, their EINs, their start dates, their websites, etc., and whatever information that we can extract just from the raw application as well. Now, the format or the content of the application does not really matter. It could be a PDF, it could be a Word doc, it could be a screenshot, it could be just a photo of the handwritten application that some of the people might be getting here. It could be anything on the right-hand side, and we'll always extract structured data on the left-hand side. We do a very similar thing for the invoices. So let's say you get an invoice or a quote sheet or a spec sheet or an equipment listing saying, hey, here's the truck paper truck that I want to buy, and here's the screenshot of it. We will extract out all the relevant details from those quotes, those invoice, those purchase orders, sales agreements, etc., and say, okay, here there are 4 different assets. Here is the VIN number for each of them. All of these are hard cost because these are actual assets versus some of the soft costs which we can segregate, such as title fees, doc fees, processing fees, taxes, etc. This is really important because you do want to understand before sending the deal to a lender, what is that soft cost percentage so that you know what you're funding or what you want to get funded from these lenders. Now, the moment we get a VIN number, we are able to extract out a lot more details from this and say, okay, what's the NHTSA make year model? What's the body class vehicle? Is it a class 6 truck, class 8 truck? What exactly are all of the specifications, such as the engine manufacturer, the drive type, etc.? A lot of these details will be used in our downstream credit matrix or our funder fit or lender matching, where we are trying to establish this deal, which lender does this belong to, or who do I send this deal to? What we also do is we figure out what the market price estimate for a similar looking vehicle would be. So what's a quick average value or a median value for a 2020 Wabash trailer that we can find out in the market. So our agents go and search through different websites such as Machinery Traders, Truck Paper, Rishi Brothers, and tons of other research websites in order to figure out what the right price for a similar looking vehicle would be. So you can at least get some estimate of what that price is versus the invoice amount that the dealer or the borrower is asking for. Now, once we have analyzed the owners, the businesses, the assets, etc., we then get into a thorough underwriting process about about our business. So, for example, the first thing that we do is we go through the Secretary of State websites for different states and say, hey, this business, what's the time in business, whether the business is active or not, what's the address for the business that's mentioned on the SOS, whether it's an LLC or what's the jurisdiction? Is this a local business registered, or is this a foreign business? If it's a foreign business, then we go find out the actual home state registration for these businesses as well. What you'll notice here is that we spend a lot of time researching about the company and saying, hey, even if the company misses an LLC or an Inc. or misspells their name, we're still able to closely find a great match for the business from the SOS. And in most of the cases, we will get you the actual screenshot of the SOS as well. So instead of you going or somebody on your team actually going and spending 5 minutes on a deal, looking up the SOS, grabbing the screenshot, putting it into your files, this automates that entire process for a single deal, and you can multiply it by the amount of deals that you run each month. It then does a much thorough web presence analysis. Now, this is where we get into in-depth understanding of what the business actually does. So does the business have a website or not? So here we can see they have a website. What's the domain age of the website? So it's 12 years right here. So this is where it starts to get interesting, where you can capture a lot of fraud as well. So if the business was opened 5 years ago on the SOS, and if you figure out, okay, the website was just opened up a month ago or 2 weeks ago, that's a huge red flag because there's something funky going on with the company. What we also do is we try and capture all of the directories that's present in. So their Yelp pages, their Yellow pages, their Manta, Triple B pages, etc. So wherever we can find the information about the business, we'll extract those. We'll also grab all of the social media accounts that they have. So some of you may be funding medical spa businesses or restaurants or cafes. In those cases, it's highly important to get their LinkedIn's, their Instagram, their Facebook, so that you can actually show that they have real activity and it's an actual legitimate business. Based on this entire report, we would then predict the closest NICS code of the industry of the business. So NICS code, SIC code is something that is very critical because this is how you get deals funded and routed to the best fit lender or the best fit funder. If I scroll down, this entire report is audit ready. So what we mean by that is all the analysis that we are showing here is backed by data. So this is coming from the website. Here's the owners are mentioned on the SOS. The industry is predicted from all of this. The online business directories, all of the links are present here. If there are any inconsistencies, it will be flagged right here. This gives you more ammunition when you're trying to get the deal done to a lender, where you can front or load a lot of the questions that the lender or their teams or their underwriting team might already have. They would definitely find out some of these inconsistencies and question you. So it would be much better if you already know about these things so you can tie in into the story. One other thing that we also extract is if there are any negative news media articles about the company, we would extract that and flag those as well. Apart from this, we do get a SAFER report. SAFER is some of the most critical data points that most lenders, brokers look at, where you're trying to understand for a transportation construction business, how many power units do they have? Do they have a couple of drivers or 5 drivers, etc.? Is the US DOT number an active US DOT or not? What sort of cargo are they carrying? Is this a general freight, intrastate carriers, authorized for hire, etc.? And we will get you the actual safer link and the screenshot of the safer report as well in our file section, so you can send that off directly to the lenders. The final piece that we do in verifying a business is verify the address. So here, if we are verifying JF Electric, a business, we are actually looking at their Google Maps addresses and saying, if I just go to this address, am I able to see JF Electric, which is associated with this address or not? Here we can see that Henry Lakefront is associated with it. We also capture the Google Street View images in order to understand what's the neighborhood type. Is this a commercial location, industrial location, or a residential location? A lot of the times, lenders are very finicky about submitting deals with residential addresses. They do want a commercial or industrial location on your file so that you can front load that information when you're sending it to the lender. It will also capture if we can see any business sign on these Google Street View images or not. Here, if I zoom in on the third image, you will see that that's a JF Electric signage on the building. We also capture the satellite view image just in case, because a lot of times lenders want to see the parking lots filled with trucks if it's a transportation business or a construction business. So you do have the satellite view images as well. Now, all of this data that you see of business verification can be sent very easily to your lenders, and we'll see that in a minute on how that works. Now, post this is when we authorize the credit pulls. Now, we are connected to all the three bureaus and can pull any of the reports. All the reports that we pull is a soft pull of the credit reports. So now here, what we do is we pull the credit reports for all the PGs or all the owners. And we do not just the credit pulls, but we also analyze deeply the entire report and say, hey, what's the total debt? What's the monthly volumes? What's the trade lines? What's the oldest accounts, etc. And then on top of that, we calculate the comparable debt as well. The comparable debt is extremely important for the lenders to understand, because most of them have certain minimums saying, hey, we at a minimum need a 20% comp debt for a mortgage, or for a 12-month comp debt, or 24-month comp debts, right? And then this entire report is super easy from a UI perspective to go through, because you have all of the trade summaries from mortgages, revolving credits, installment lines, etc. You also get access to the raw trade lines. So here I can quickly filter out and say, hey, here are all of the open accounts, here are all of the installment accounts, and I can see how much they have been paying, whether they have any delinquencies, any 30, 60, 90-day differences on payments, etc. Now, once we have analyzed the credit reports, a lot of you may also be getting bank statements. Bank statements has become a go-to document to collect from most businesses. The reason to collect bank statements is A, it's very easy for a business to supply you the bank statements. B, it unlocks the amount of lenders that you can submit the deal to and get the deal funded from. So if it's app only, you're restricted to some of the major banks or some of the bigger lenders who do mostly app only deals. But if you do get bank statements, then it opens and unlocks more opportunity for the deal to get done. Now, the trade-off is, once you get bank statements, the first thing that we need to do is verify the authenticity of the documents. Now here, what we do is we run a lot of machine learning algorithms on the back end and figure out, has this document been tampered with or not? So here, if I go to the high risk, so here we can see that it's suspicious. The document fraud score is pretty low or pretty high, and we just have a high risk flag here. So let's look at the document and see why that is. So if I see here, I can see that there is a flag saying concealed text detector. So if I go on hover over here, I see that the original amount was $780 for beginning balance, and they changed it to $78,000. I can see that the ending balance that was $3,500 has been changed to $181,000. It's a massive gap, which means that if you are getting this deal funded, and if you don't figure this out, this deal may go bad and it may come back to you. As we can see in this entire document, all of the deposits have been changed with. So all of these amounts have been changed with. Fraudsters are getting very, very smart, and they're always a step ahead. It's very difficult to eyeball this and just look at the fonts and figure out if this document has been tampered with or not. But we can, because we have seen millions of bank statements and we exactly know how a Chase bank statement looks like. And we know most of the banks and how they, like what software they use, what fonts they use, etc. Now, once it goes beyond the fraud checks is when we analyze the cash flows. Now here, what we are trying to understand is, hey, what's the minimum balances? What's the average daily balances? What's the number of negative balance days? So, and where are the negative balance days happening? How many NSF transactions there are, or non-sufficient fee transaction, which is a major criteria that most lenders look at. Now, there are two most critical things to look at from bank statement perspective. One is of the total inflow, so of the money that a business gets, for example, $121,000 in November 24, how much is the actual revenue of the business? So if I go over here, Kaaj shows me of this $121,000, what was the actual revenue versus what were some of the transactions which will not be considered as revenue for any of the lenders. So here we sort out all of the inter-account transfers, MCA loan disbursements, insurance payouts, tax refunds, reversals, etc. And show off that $121,000, only $96,000 was the actual true revenue of the business. We do the same thing for outflows so that you can see, hey, how are they spending their money? Is this mostly going through credit card bills, through payrolls, through machinery and equipment, through vendor payments, etc.? And are there any entertainment related, gambling related, crypto related, alcohol related purchases that you can find out so you can judge if there's any activity which the lenders won't like, or the deal, it might kill the deal. Now, if there are any debt payments, in this case there are, we will show you a detailed loan analysis. Now, this is where things get very interesting, where you can say, hey, the business is doing good because they have a $100,000 in true revenue every month. But as you see from the loan analysis, they have a lot of MCA loans or merchant cash advance. A lot of the people in equipment finance and beyond as well don't really like a lot of MCAs. They stack up and they deplete a lot of cash. So here we show you that they have a prime funding deal or a prime funding MCA loan, on which they're paying $660 every weekday. And you can see all of the transactions that they have been paying. So it gives you a very good breakdown of their existing debt positions, their MCA loans, other bank loans, government loans, other equipment finance loans, any auto loans that they might have. You can also see how much they have repaid, what's the frequency of their repayments, whether it's a weekly payment or a bi-weekly or a monthly payment, etc. Now, similarly, it can also analyze a lot of the full financial deals as well. So I know some of you may be getting slightly mid-ticket or large ticket equipment deals as well, in which case you do have income statements, balance sheets, cash flows, etc., that you want to spread. This tool will automatically spread those financials, show you a detailed income statement so that you can go from revenues to COGS to EBITDA to cash earnings, etc. And then you can automatically, it will calculate all of the financial ratios that the lender really cares about. It does the same thing for tax forms as well. So on the tax forms, it will analyze their gross business revenue, their net incomes, their incomes, regardless of what the tax forms are. It could be Schedule K1s, it could be Schedule Cs, 1099s, W2s, etc. Now, what it will also do is check a lot of the other reports that if you want to subscribe, you can run a EIN verification. So you can verify if the EIN is correct or not. You can verify if the owners or the businesses have been found in any of the OFAC checks or OFAC reports or not. You can verify the background reports on these customers or a criminal background and say, hey, are there any bankruptcies associated with this business? Are there any liens associated with these business? Are there any judgments related to these businesses or not? You can run a KYC on those owners and figure out, does the name, the SSN, the DOBs, etc., or all of these matching with government ID records or not? Is this a deceased person, etc.? So there are a lot more fraud detection tools which are available within the Kaaj platform for you to analyze. Now, once all of this is analyzed, we would then produce a overview section. Now, this is where you can turn to Kaaj, and Kaaj would become your junior credit analyst or a credit analyst that you can hire. In which case, it will write the entire credit summary and say, hey, here's the company, here's the background, here's all of the bank details, here's the credit score, and this is the asset that they're looking to purchase. This is a typical credit summary that most of you may be writing on an email or a portal submission when you're trying to submit the deals to a lender or a funder. Similarly, it will also analyze and give you a directional sense of what's wrong with this deal or what are the risk factors about this deal. So it says, okay, there are inconsistencies because there are mismatches on the naming convention, the address looks good, the DSCR on the banks is not great, there are a lot of NSFs, there is a risk indicator of the on the fraud side of things, etc. So it will flag a lot of the things that you should get answers to before you get the deal submitted to the lender. Now, once everything looks good and you analyze all of these things, the time that it takes from start to finish for Kaaj is within 4 minutes. So within the application comes through the door on an email, portal, online application with a bunch of these documents. Within 4 to 5 minutes, you have all of this analysis with all of the detailed bank statement reports, invoices, credit pulls, KYB information, SOS, safer reports, etc. All of this is analyzed within the first 4 or 5 minutes. So that, again, this saves so much time, it does so much due diligence, it keeps everything in a single place, it structures the entire workflow that you may be doing right now, which could be on spreadsheets, on some of the legacy tools and technologies that you may be using right now. Now, once you have figured out the analysis on this particular deal, what then is the next step is basically show me all of the lenders that I can get this matched to, right? So here, if I go to the matching algorithm, I can see that this deal would be a great fit for example, a 360 tier 4. The reason for that is we configure all of the lenders that you work with. So let's say you work with 8 different lenders or 12 different lenders, and they have a bunch of lender guides, criterias, and you're managing either on your head or in your spreadsheets or some tools that you may be using, etc. Kaaj makes it super simple for you to configure all of those rules directly into Kaaj in an automated fashion so that we can really know, okay, this deal, great for 360 because it matches their FICOs, loan amounts, industries, the age of the equipment, whether bank statements are required or not, what's the mileage on the or the maximum mileage that they support, what's the comp percentage that they support, what's the minimum time in business, etc. And what are the industries that they restrict with, etc. So all of the fields or the analysis that we did in the front end of the process, which is time in business, industry, bank statements, the comp credits, the credit pulls, the loan amounts, etc. All of this will be used in our matching algorithm to find you the best fit funder. Now, once you've found the best fit funder, the way to submit deals through Kaaj is extremely simple. A lot of the names that you're seeing here are already Kaaj customers. If they're already Kaaj customers, we're already integrated into their system. in which case you can one-click submit your deals directly to their portals, directly to their systems, which becomes very, very easy and clean for you to submit. The other way to submit is if they accept email applications, as a lot of them do. Here you can wire up your own email. So instead of Utsa, which is me, you can wire up your own email and you can connect your own Outlook and Gmail accounts. You can insert the credit write-up as well. So here, this is how the email would look like. Hey, 360, here's a new loan, here's the company, here's the bank details, here's the credit score, here's the asset that they're looking to purchase, and all of the attachments that we saw, not just the raw files, which are renamed and classified, all of the other accounts, so SOS, safer reports, bank statement analysis, tax form analysis, address verifications, the Google Street View images, etc. All of this are auto attached in this email, so you can submit this to any lender of your choice and just click the send email so that you can directly submit deals via Kaaj. It's that simple. So deal comes in, bunch of packages, gets analyzed through Kaaj within 4 or 5 minutes with everything analyzed that you saw here about the applications, credits, KYBs, bank statements, invoices, etc. It found the best fit funder for this deal, saying, hey, great deal for quality, 360, 4-hour funding, whoever it is. And then you can automatically submit the deal within the Kaaj platform as well. I'll just take a pause there and want to open up things for any of the questions that you folks may have. I also wanted to share an exciting update where we are partnering with AACFB, especially for all of the members, to bring something special. Especially, we're launching a new LOS system, which also allows all of you to not just capture the deal on the front end, but also run t-value calculations, run your documentation within this. So you can select a documentation template. You can fill out all of the fields within those documents, and then send out those documents for final signatures to your final borrowers as well. Quickly just stop sharing right here and then open the room for any questions.
Perfect. Thank you. So this is the opportunity. We'll give it just a few minutes to have everybody type in your questions to the Q&A box. Or you can raise your hand if you'd like to ask a question via your voice. So we'll give it just a minute. I know it's a lot of information to digest, so sometimes you have to kind of think about it. See if anybody has their hand up.
And while people are thinking about questions, I would like to maybe share this insight and thought that when you use Kaaj, think about what all things in your current stack, especially for brokers, are getting replaced by Kaaj. And that's how you think about the ROI you are getting. We did a quick survey and we found that I think these are all the things that Kaaj replaces around digital forms or e-signature. Credit pulls are included. You don't need a separate DNB report subscription. You don't need separate criminal background reports, bankruptcy liens, judgment reports, any separate LOS, or even people save additional higher cost. So net cost savings annually, we forecast it's going to be roughly around 100K. Plus, you save a lot of time as you are thinking about submitting the deals, as you're thinking about getting to the lenders faster and with a more comprehensive designed write-up package. So we're here to answer any questions. Would love to see if I see one question in the chat.
Yes. So Lester wants to know if some deals have unique story about them. How are those submitted through Kaaj's system?
Absolutely. Fantastic question. So, Lester, thanks for the question. The write-up summary, and let me just pull the screen back up quickly. Yep. So this write-up summary that you see here, first of all, this is customizable. So if you have a specific template that you are accustomed to writing these write-up summaries or credit memos or credit summaries, you can definitely configure that via the template so that we can configure it according to how you are writing in your voice. The other thing that you can do is add a bit more to the story by just editing it right here and say, hey, I talked to this guy. I know they are, 5 years in business, but has had a previous business in the same industry for 30 years, right? Maybe that's a unique insight that you want to give it to the lender. So you can add and edit more data points even outside of what the AI figures out right here so that you can submit that to your lenders. I hope that answers your question of what you're trying to achieve.
Right. I think that's sometimes they have more detail that they need to provide about a specific deal, because it might not look doable on the surface, but the more information that they can give, the better. And that's a great point, Shivi, about the people have a lot of technology that they're currently using that they don't necessarily need to keep those individual subscriptions if they're using Kaaj, because it's all bundled in. And Lester said, yes, that's perfect answer to his question. Wants to know, so your service provides soft credit pull and we don't need to do that on our own?
Yes, exactly. Yeah, you don't need to keep paying your credit pull providers, etc. And the cost for each credit pull is just covered under the Kaaj platform. So we don't charge anything separately for any of these individual pulls, etc. It's just part of your LOS package that happens through Kaaj.
And it's all 3 credit bureaus, you said?
Exactly, and you can choose which credit bureau that you want to provide. Most of the industry uses Experian, but there are certain brokers who still prefer TransUnion, FICO 8, FICO 9, etc. So again, we can work out those details once you sign up on Kaaj.
Great. They want to know what the cost is and does it integrate with contact management?
Contact management, I'm assuming that you're trying to understand, does this connect with your CRM, maybe contact management, maybe like a Zoho or Go High Level or some of those.
Yeah, I
maybe
guess if they already have a CRM that they're happy with, maybe, and they want to use this, does it integrate or
Absolutely.
is it act as the CRM?
Absolutely. So what we recommend doing is it does the entire LOS management for smaller brokers, mid-ticket brokers here. But if you have a CRM, if you have Zoho, Microsoft Dynamics, Salesforce for some of the bigger lenders, we directly integrate into a downstream system. It could be Zoho or any of those CRM. So if you have a CRM, we would integrate directly into your CRM, which is your downstream system.
They don't need
And
to leave their CRM to use this.
sorry,
They don't need to leave their CRM to use
they don't need to use, yeah, exactly. They don't need to leave your CRM to use this, because you may be managing your marketing or lead generation or some campaigns that you may have on Zoho, or some of the other slightly cheaper, more advanced CRMs.
And your cost is based on how many applications or what are the levels?
Absolutely, yeah, great question. So we are volume based. So the more the amount of volume of applications that you have determines the amount of price that you pay for Kaaj. And again, we are working very closely with AACFB to bring some of the member discounts to the entire AACFB community. So yeah, stay tuned on the exact pricing that we will have for some of the smaller brokers and mid-ticket brokers, but it is dependent on the number of applications. So there is like a minimum tier that you subscribe to that gives you the access to the platform, the entire LOS, credit pulls, and everything. And then beyond that, it's basically 30 applications, 50 applications, 100, 200, 500, 1,000, etc. So it's basically unit based and the amount of applications that you run through Kaaj.
So if you start at the under 30 applications and your business takes off and then goes more than that, then you just go up based on your volume. Can you go
Absolutely.
back down if your volume falls off?
Yeah, we can chat about those things. Hopefully that has never happened with any of our customers
I
where
hope so.
we've seen a
Nobody
drop
wants
in
that.
in applications. But yeah, if a situation arises, then happy to chat about those
No
things.
one wants to do that because the unit price reduces as the volume increases. So they want to keep the benefit of lower unit price.
Absolutely. Yeah. So if someone wants to sign up for Kaaj, what is the implementation process? How long does that take?
Absolutely. So the implementation is day zero. So the moment that you sign up with Kaaj, we give you all the access. The only thing that takes time is the credit pulls. So you have to get through a FCRA because you have to get approval from the bureau to let you use the credit pulls. That takes about probably a week or a couple of weeks. And then if there are any downstream integrations to a CRM or anything, that usually takes about 2 to 3 weeks. So we typically budget the first month as implementation, but the core Kaaj platform, let's say you sign up this evening, you're free to use the entire Kaaj platform tomorrow morning. So it's a turnkey software for us.
Gotcha. Yeah, I know some of the bureaus have some restrictions on home-based businesses, I think. I know a lot of our members are probably fall under that. And I want to say I can't remember which one it is that has more restrictions.
Experian is the one that does not allow home-based businesses to access the credit pools, in which case you can get approved for TransUnion, which is the most used, like the second most used. And if they prefer Equifax, which not a lot of companies do in this industry, then you can also get access to Equifax. So we are agnostic, like whichever bureau that you choose. Yes.
And some
Yes.
of them might already be signed up with or approved by some of the bureaus, I guess, and they can just, that should make that process faster, I would hope.
Yeah. And with Kaaj, we are already, because we have so many customers through these bureaus, they know our process and they know our approval process, etc. So it's usually probably within a week or a couple of weeks.
Perfect.
Yes, Lester, we will send you the detailed sort of pricing information. We're working very, very closely with the AACFB members committee.
Perfect. Well, I don't see any hands up and I don't see other questions. So we'll go ahead and wrap things up. I want to say a big thank you to all of our participants and especially our valued associate member and gold sponsor, Kaaj. Thanks for a great job, both of you. We look forward to having everyone again at the next Meet the Funder webinar on September 2nd. And we invite everyone to meet with Kaaj in person at the Commercial Financing Expo coming up in October in Irvine, California. Thank you so much. Have a great day.
Bye.
Thank you, everyone.